Okay, good evening, guys. My name is Kyra Ambrose. I'm a platinum leader within Currency Crew and CEO and founder of Generation Wealth Investments. And tonight I'm just going to be going over how to mark up your charts. Okay, I'm going to keep this very basic. We won't go into any advanced skills tonight, but I just want to go over simple chart markups and understanding the chart for you guys tonight. So this will be a charts 101. Okay, tonight I'm going to be using TradingView for those that are part of Currency Crew, and I am Academy. Don't worry, we definitely have the harmonic scanner that you can do this on as well. But I do like TradingView just because I know this is central to some people who are maybe not a part of our organization that might see this video. So we'll be using TradingView tonight, and I'll go over just some simple chart things as well as how I mark up my charts to see my trades. Okay, so as you guys see here on the chart, I have USD Swiss franc pulled up, USD CHF, and I'm going to just break down some of the key things that are important in understanding charts. Okay, so number one, and I'm going to type some of this out for us. Where's my text box? Okay. Here we go. Okay, so the first thing you always want to do and understand when you're marking up charts is understand and identify the trend. Okay, so that is literally the first thing that I do with any of my charts. Okay. So, and how I'm going to do that is I'm going to go to my day chart. That's going to give me kind of an overall view as to what is happening on my charts. Okay, so each of these candlesticks here obviously represents a day, as we are on the day charts. If I go down to different time frames, every candlestick would represent that time frame that I'm on. But I think the best way to see what the market is doing overall is the day charts. I think that's one of the best ones. You can go to the weekly or the monthly chart as well, but I think the day kind of gives you an idea without overwhelming you. Okay, so what's this? I think this shows that this was April starting. Looks kind of like we're in a downtrend right here. All of these back here, this is February to December of last year. This isn't as important. So remember, guys, these are candles each represent 24 hours in the market. So we kind of don't need all of this back here. You can definitely pay attention to it, keep reference of it. But really what I'm focused on is where the market kind of is currently. What's been happening over kind of the last 30 days, what's kind of been happening over maybe the last 60 days if it's still been continuously in that movement, right? So on my day chart, I see that from about mid-April, mid-May, beginning of May, we've been in this continuous downtrend, right? So our last major high was up here. We saw price reject this area here, and then tried to come back again to the same area before it went further down, right? It hasn't broken its last low, which if you guys have been in the market since March or before March, you understand that this was kind of literally a one-in-a-lifetime thing due to coronavirus here. So the market's been pushing its way up, but it's obviously come back down again. And it's still pulling back here. So when I'm looking at this, I want to go from my last kind of high in the market, right? The last kind of major area price stalled at. For me, that's going to be right in here because remember I said price came up. Here we see let me zoom in a little bit for you. We see these candles right here. We see the candles wick out around the same line, and then we see this candle kind of try to approach that same area again with another wick before it starts to drop pretty steadily. So with this, I'm going to just take my cursor here, and I'm just going to draw my trend line from the last high to pretty much where price is right about there, okay? This is just letting me know that for the past month and a half, 2 months, we've been in a downtrend. Remember down here, it's giving me my time frame. So this is important for me to understand in anything that I'm looking at because I want to know, is price going to break out of this and go to the upside? Are we looking at price going further? That's just kind of the basics of where I am. So we've identified our trend. That's our downtrend. Also, you guys, too, I didn't mention this, but my charts are very simple, okay? So just to break down what I have here, this yellow line right here is my 200 exponential moving average, my 200 EMA. I like this EMA because essentially it kind of marks like a halfway part in charts for me. So if I zoom out here a little bit, you kind of see where it's really cutting the chart nicely in half. So everything above this kind of line is a buy, everything below is a sell, and it just kind of gives you more of a clear indication of a buy or sell. I usually look for more long-term sell or buys or sells or movements once price breaks above or below this line. So if I'm looking for a buy, cool, I'm gonna buy up around till about my 200 EMA, because then what I wanna see is if price can break this level. The 200 EMA itself acts as a really great support and resistance level. So for a buy, I would look for it to break, kind of retest again, and then keep going up before I would continue that buy. For a sell, same thing, I'm looking for it to come down, break, retest, and then keep going down to confirm a continuation of a sell. This is really great if you're looking for major moves. If you're like a swing trader or intraday trader, this is something that's great. That's going to give you further confirmation as to whether or not the move is strong enough to continue to buy or continue to sell. Okay, and then also down here, you guys, I also just have my MACD, which I really like to use. If you are a part of Currency Crew or IM Academy, you obviously have probably heard of Stevenson Lindor. He is one of my favorite educators. I absolutely love the MACD because of him. And essentially, it just kind of gives me a further confirmation that once this MACD crosses to the bottom, anytime it's in the red, it's a sell. Anytime it's in the above in the green, it's a buy. And it moves, as you see, really well with the chart. But then you have some parts here, and I'm going to see if I can find you guys a really good area of divergence, kind of actually what we're getting here. So if you look at this like last like wick out here, this is where price came down, so about this level on the MACD, right? But then we see it made a lower low. It came down further than this last candle and came down here. This is where it wicked out at. But our MACD is actually going up. It didn't come as low or lower than this last low over here. This is actually something we would start to call divergence, and I want to see if maybe once we go down to the 4-hour or the 1-hour charts, I can give you even more of a clearer view of it. But it's just really good because as the MACD moves in one direction and price is moving in the other, that'll give you an idea that there's a reversal coming. So as this keeps moving up, when price was to keep coming down, this is just letting me know this down movement's starting to get really weak. And I'm gonna start looking for a buy, right? I'm gonna get ready for price to really start shooting up. That's one of the great things about MACD and divergence. So this is just a very simple chart, you guys. If you use any strategies, SK5, MA Cross, BYOB, those are also great as well. Feel free to continue to use those. But I definitely do like simple charts. I personally don't like a lot going on in my charts, but just for the sake of basics, understanding some of the things that we're gonna go over, trend lines, support and resistance, patterns is very important to any type of strategy you're using, any type of way you trade, okay? So just to hop back in where we left off. So like I said, I drew my trend line. We've got a little bit of a downtrend happening right here on my day chart. So now what I like to do is I personally like to go down to my 4-hour chart and look for major areas of support and resistance, okay? And if you guys don't know what support and resistance are, support is essentially the floor level and resistance is the ceiling, okay? So we're looking for areas that price struggle to break below and areas that price struggle to break above. That's gonna give us some clear indication of where major areas or potential reversal areas are in the market, okay? So I'm gonna get my horizontal line right here. Mine is blue, and I like to do this differently. So I'm gonna tell you guys the way I do mine. I like to do major areas on my 4-hour in one color, and then some secondary areas that I will use for my TPs in another color on my 1-hour chart, okay? That's just one of the ways that I found has worked really, really well for me. But just so you guys can kind of see, this is something we will do, okay? So when I say major areas, I'm looking for an area that price kind of touched about maybe 2 or 3 times. So I'm gonna zoom in a little here. And I did not mean to put that line there, so I'm gonna delete that. But to give you guys a clear view of what I'm talking about, right? So just off of RIP, one of the major areas I see is right about here. So we have this area where price is wicked out right in here. And let me zoom in a little more and adjust my charts. There we go. So you guys can see this. So this is what I'm looking at right here. This is a major area where price is kind of like wicked out over here. It started going under, and it stayed in this area, but it never really broke back above, and it just started to continue back down. So this for me would be a very major area of support and resistance, I'm sorry. So I'm going to mark that with my blue, especially because as you see, it kind of lines up with my 200 EMA, and this is why I love the 200 EMA. If price was to break above my trend line, I know that by the time it probably gets to this area, it's going to hit my 200 EMA, and it's very possible it might wick out around here and come back down. So this would be an area that I'm looking to be very cautious around, because what I don't want is to, you know, say, okay, cool, price is buying, and I'm gonna get in, you know, to go to its last high, which was all the way up here, and price gets in right here and wicks out. Or I get comfortable with price where it is and I get in for another buy at this area, but that buy never makes it into profit because I didn't realize that this was a major area of support and resistance on my 4 hour, okay? So this is why I think it's very, very important, okay? Another major area that I'm seeing is right in here. Again, we have 1, 2, 3 touches. That's a major confirmation for me. Anywhere that price touched about 2 or 3 times is a major, major confirmation. And then obviously right up here, if you guys don't see this, this is another area as well where price just really, as you see, like it consolidated right in here, consolidated right in here again, tried one more time before it really started making these lower lows and really moving into that downtrend. So these are going to be some of my 3 main areas of major support and resistance. Now you can always mark up more. The reason why I don't like to do so many on my 4 hour chart is just because it's not as precise as doing it on my 1 hour. Like you could do one here. You could have done it like right in here because there's this one, and then this one from as resistance, and then this area as support. But for me, that just becomes a lot more tedious, and I don't personally like to do it all on my 4 hour chart. So what I'm going to do next is go down to my 1 hour chart, and this is going to give me a clearer view as to what areas I'm looking for price in between these 4 hour major resistance areas. Okay, so let me zoom in a little bit here. Awesome. So price is currently right here. And actually, when I go to my 1 hour chart, we see price is already currently at my 200 EMA, right? So price already has a struggle point right here. It has to break above this. And looking at this overall, though, I can't say that my downtrend is yet to be done, right? Because, sorry, I'm trying to zoom in a little bit for you. If I look here, I see that my MACD made this little high right here, awesome, but then it went up again, and the MACD didn't come as high again. So let me make this a little bigger for you. See, this is the area I'm looking at right here. My MACD actually looks like it's getting lower and lower, and this is why doing all these different time frames is really important, because as my MACD is getting lower and lower, as we just saw, my candlesticks look like they're getting a little higher, right? So there was this area that TP wicked out around here. This one's wicking out around here. And this one is really sitting right at my 200 EMA. And as we see, it really rejected my 200 EMA a few times. And this could really be symbolizing that price is going to pull back again. And it could possibly break this low or keep going. And we know overall it's still a downtrend. And even though I'm getting some divergence on my 4 hour, the 4 hour is a lot of time, you guys. So I would say when something like this is happening, I'm really looking for some clarification as to what price is going to do more so on my 1 hour chart. Because let's say I did see that the divergence was forming, right? And I hopped in for the buy right here. But I see there's divergence forming on my 1 hour, right? And it rejects my 200 EMA. Let's say that happens and it starts coming down. I'd be very upset if I got in for a buy right here, right? Because this is just another indicator that I needed to wait for it to break above, right? So this is very clear. So just to tell you guys something I would do in regards to this chart right now, I'm waiting for price to break over the 200 EMA, break over this trend line, and essentially kind of retest it and go back down, or go back up, I'm sorry. So I would look for something like, let me get my arrows here, something like this, okay? So that's number one. And actually, let me pull this up a little more because I want this to go like back down. Sorry, guys. And then I would look to buy on this second arrow going up. And I would honestly buy it all the way up to this major area of support and resistance on my 4 hour. Now, I could give myself TPs within that, because if we look over here, we see there's some secondary areas of support and resistance, right? So if I wanted to send this out as a signal, let me get my horizontal ray and I'm gonna make it a different color. I'm gonna make it purple for you guys. So let's say I get in around here, right? My first area of TP is probably gonna be right around here. Because you see this is an area that price kind of came into a few times, consolidated, and then moved down from there. And then I probably put my second TP, I'm sorry, I'm actually gonna move this down a little. Oops, don't wanna move that, just so you guys can see better. Sorry, I moved that line, so that goes there. So my first area of TP would be around here, and then my second area of TP is gonna probably be around these wicks, right? Because I see prices come up here a few times and wicked out right in about in this area. I see it over here. There's some wicks action there. There's some wick action there. Some wick action actually all the way back here. So my second TP would be around here. And then obviously this would be my third TP, right? Because I know this is a major, major 4 hour resistance. I wouldn't want to put anything higher until I get this same kind of break and retest right here. So once it came up there, again, what I'm looking for, and excuse my puppy barking in the video, you guys. But what I would be looking for is price to continue up, break, and I'm gonna drag this up a little bit more, come back, retest, and then keep going up. And then once that started, you know, look for another entry here, mark up my next levels of TPs and my next, look at my next major area of support or resistance, I'm sorry. So that's really how I would be looking at these charts. Now, because a lot of you guys do like stop losses save your account. I always love a good stop loss. Don't knock a stop loss until you try it, okay? I would put honestly, and something standard that I like to do is give myself 30 pips of room. So if you wanted to go with the standard from where I'm thinking I would enter, I'm gonna just pull this down about 30 pips, comes to right about here. Okay, so that would be my major kind of like 30 pip standard stop loss. I think that's just good for most Forex pairs. I think if you're dealing with Great Britain pound pairs, JPY or Japanese yen pairs, you should probably do about a 60 pip stop loss, only because they're a little bit more volatile. But US dollar, Swiss franc, CAD, New Zealand, AUD, a 30 pip stop loss is pretty decent among most pairs. So that would just be what I would be looking for essentially use Swiss franc for a buy. Now, like I said, right now the chart's a little confusing, and this is why it's important to be patient as a trader, because even though this is moving up, I do have divergence happening on my 1 hour chart, but then again, I also have divergence happening on my 4 hour chart. So essentially what I'd be waiting to see is if this does break through to the upside. Awesome, great, I've got this set up. But let's say it gets here and it really does start to fall again. My precedent for this would be really to just be, ready to react to the market if it does that. So I'm actually get rid of all this stuff so I can just kind of not confuse you guys. I know some of you are probably new and you're probably like, wait a minute, why is so much stuff on her charts? How do I do with this? So now we're just gonna focus on if this trade was potentially to reverse, okay? So, and keep going down because it's already in a downtrend, right? So let's say price does come up to my trend line if it doesn't already reject my 200 EMA. What I would be looking for is essentially kind of this movement, right? So price to finish up there, maybe come back And it could do one of two things. It could start going down because it's already rejected that, and just keep going. That's actually what's most likely to happen. However, sometimes you do get price where it does like forms like maybe like a little M on this line. It does its own secondary retest, and then it still rejects it again, and that's where you might get the bigger move. So this is something I could look forward to, or you could look for this first move down to be your main move down, okay? But it's important to understand this, because obviously the moment it starts moving down, you could possibly get in, and worst case scenario, it comes back to your entry and then it really moves, or it never comes back to your entry and you're still in for profit. So that's a win-win either way. You would just want to start seeing your confirmations. So confirmations that I would be looking for a sell here, for the sell to continue, is for my MACD to start coming down, price to finish going up, and really let's see this major play of divergence. So to explain to you guys what I'm looking for, divergence on my MACD, I'm really looking for this to continue down and to start crossing under to the red side for a sale, right? When that happens, this doesn't necessarily mean that the candles will immediately start to shoot down. They might continue to come up, and then that's where you might see that big drop. So if this part of my MACD doesn't start to get any higher than this last part, I'm going to be looking for major divergence still here on a sell for another pullback. And honestly, on this sell, I'm going to be honest with you guys, I'm looking for a very short position right now. This would be my TP1. Actually, this would be my TP1 right in here. So let me mark that up for you. And I'm going to explain why. Because I know that there is divergence forming on my 4-hour chart. The bigger time frames do impact what you see. The bigger time frames will impact the pullbacks. They'll impact, how much movement is possibly going to happen. So even though this is an overall downtrend, I know it's starting to get weak on my 4-hour. So I want to have my TP a little closer for myself. So my first TP would probably be around here, this first area of support for price. My second one would be just under this, because this is a new area. We haven't seen price come this low in quite some time. It's been months, right? It's been a few months, and the only reason price came this low last time, right, was due to coronavirus. This was a phenomenon in the market. We knew the markets were going to drop, but we didn't expect, we couldn't predict corona. We didn't expect this. So where I have this area right now, I don't know that price would come all the way back down to this kind of next area of support and resistance. And I'll zoom in a little bit for you guys so you can see it clearer. But this would be my next area under that. And remember, this hasn't happened since coronavirus. So I don't know that price would be strong enough to keep coming down. So I could put my TP3 here on this 93202 line. But again, like I said, price coming this low was really due to coronavirus. Uh-oh. Sorry, guys, my screen just went out on my end. There we go. Was really due to coronavirus. So I wouldn't want to push my luck and say, yeah, it's going to happen again, and it doesn't, right? So I would definitely get in for TP1. TP3, sorry, going all the way back to where we are now price-wise. There we go. TP3 would be definitely iffy for me. I would honestly say if price comes down, it would come to TP1, TP2, TP3. I don't know. We would have to see some major shifts in the market, because I already told you we got divergence on my 4-hour. We actually got some divergence here on the 1-hour from this major sell region. Even though we have some divergence for this buy, that just means we're expecting a pullback. But overall, we know price is really kind of getting ready to move upwards. So this is just honestly how I would be looking at it. For my TP, or for my stop loss, I'm sorry, for the sell, again, 30 pips. So I'm going to take my measuring tool, and let's say I got in here. 30 pips is actually the TP1 on the other side. So funny enough. Also, too, if you guys don't know how to use this fun tool, we have it on our harmonic scanner, and we also have it on TradingView, but that's essentially what it does. It measures this. So this number over here is essentially your pips, okay? So that is the best way. Don't worry about this, this 0.00300. It's not important. This is really what you're looking at, the 30 pips, okay? So that's just how I would mark up this chart. Very, very simple for those of you guys who are wondering how you would set your TPs, your take profits, your stop losses, all that kind of stuff. And again, please be aware of these major areas of resistance for your 4-hour charts, because this could be something that really takes you out of the trade, right? So if I was to be looking for a buy right here, I would want to, like I said, see price break, retest, and then keep going up to this next major area. So that's pretty much just a quick way that I mark up my charts, you guys. As always, if you have any questions, please feel free to reach out to me. I'm happy to answer them. But I'm going to just stop the video here because I don't want to go too far, start confusing you guys, or start throwing things at you that aren't really advanced. So again, this is a basics chart 101. You can do this on any time frame. Support and resistance, TPs, all personal. Where you see the market going and stopping, that's what's important. And use these time frames. Remember, we want to start on, and sorry you guys, I started a text chat for you and I don't think I finished using it. There we go. So I'm gonna do that for you. I'm gonna type this in. Let me get the chart rearranged here. So awesome. Okay, are we gonna, let me edit? There we go. So number one, we want to identify the trend. Number two, and I'll put in parentheses that what chart we want to do this on. We want to do this on the day. That is probably one of the, the best charts to do that on. Number two, we want to do major areas, major support and resistance. And that is good for the 4-hour. Then you want to have your secondary support and resistance. And these will be your TPs. And you want to do that on the 1-hour. Rule of thumb is a 30 pip stop loss for most Forex pairs. I'm going to do 60 pips for GBP and JPY pairs. Okay. Sorry, guys. I got a lot of typos in here. My bad. Okay. And I still have a number sign instead of a dollar sign instead of a number 4. So identify the trend, your major areas of support and resistance on the 4-hour, your secondaries, areas of support and resistance, which are usually your TPs on the 1-hour, standard 30 pip stop loss for most Forex pairs, 60 pips for JPY and GBP pairs. I would also say to just elevate your trading game. If you haven't already, I'm going to save this, but if you haven't already, in our, let me see if I have it over here, in our Currency Crew folder, especially if you are someone who is a part of my organization, you've probably seen this cheat sheets and templates folder that we have in here. For those of you who have never seen something like this, I do want to really throw this out here for you guys too, but there is, I'll drag this over here so you guys can hopefully see this. Come on. There is this book, you can find it online, but it's called Chart Patterns, Cheat Sheets for Forex Traders. And essentially, this is a very important area that you guys want to pay attention to, is really market structure, okay? So even though we can look at the charts all day and mark up areas, support and resistance, it's still important to understand if the charts are forming certain patterns, right? My MACD is something that definitely helps with understanding patterns and how they move momentum-wise. But definitely understanding all of these different types of patterns is going to be what helps you understand also what you're seeing. You can expect certain things based on, sorry guys, based on these chart patterns as well. So head and shoulder or double bottom, sorry, you can expect to buy. Have head and shoulders, you can expect to sell. So these things also help give you further confirmation as to what's getting ready to happen in the market. If what you're looking at in the charts, and I can't stress this enough, if you look at the charts and something is not making sense, 9 times out of 10, it's not necessarily you guys. It just means that the market is in a very indecisive area. It just means you need to wait further for the market to make it clear. So if you've got a sideways market, if the market is really just kind of ugly, there might have been a lot of news, there's wicks all over the place, give it a few hours to correct itself and give you a clear understanding of what's going to happen. Don't rush it. Be patient. If you miss the move, that's okay. Just wait for a pullback and a retest to get in further, okay? Other than that, guys, I'm going to end the session here. If you have any questions, feel free to reach out to me. I'm more than happy to answer them. Definitely make sure you got this part down. And then other than that, guys, have a great night.